Financial privacy is about to become a thing of the past in America. Since March 4th, the Department of the Treasury, under the direction of the Obama regime, has been working on a planning document that will allow government, through the utilization of domestic-based spy agencies, to access all of your personal financial transactions. This legislation will be introduced as a necessary step to combat terrorism activities on American soil. But it is important to note that this is legislation that will inevitably allow government access to your personal finances by seizing accounts and finances of American citizens like you and me. FATCA, or the Foreign Account Tax Compliance Act, may have been a barometer to see how much money this government could steal from Americans under the auspices of compliance violations and/or failure to disclose personal financial information and transactions. The test subject group for FATCA, which was implemented on January 1st of 2013, are Americans living and/or working abroad, U.S. financial markets and institutions, and U.S. businesses operating in global markets, and it is expected to yield an additional $792 million per year in revenues to government, in addition to taxes and fees already assessed on foreign-based investments and earnings. Let me give you some highlights of this legislation, and I'll place a link below if you want to review the ramifications of this legislation in more detail. What is FATCA? FATCA was initially introduced to target those who evade paying U.S. taxes by hiding assets in undisclosed foreign bank accounts. With such a noble goal, and with the strong backing of the Obama administration, Congress quickly drafted the FATCA legislation and quietly slipped it into the Hiring Incentives to Restore Employment bill, signed into law by President Obama in March of 2010. Most members of Congress claim that they were unaware of the unintended negative consequences of this legislation will have when implemented in 2013. FATCA requires foreign financial institutions of broad scopes, such as banks, stockbrokers, hedge funds, pension funds, insurance companies, and trusts, to report directly to the IRS all clients who are U.S. citizens. Starting on January 1st of 2013, FATCA will require these financial institutions to provide annual reports to the Internal Revenue Service on the names and addresses of each U.S. client, as well as the largest account balance in the year and the total debits and credits of any account owned by a U.S. person. If an institution does not comply, a foreign institution does not comply, the U.S. will automatically impose an additional 30% withholding tax on all its transactions concerning U.S. securities, including all proceeds of sales and securities. Now, what that means is that if you make a transaction or a cash out on a security and you're not in quote-unquote compliance, the IRS will deduct an additional 30% from your proceeds of the sale of any such securities. It also goes on to state that in addition, FATCA requires any foreign company not listed on a stock exchange or any foreign partnership which has 10% U.S. ownership to report to the IRS the names and tax identification number of any U.S. owner. The FATCA legislation goes on to claim that a 30% withholding tax on all income transferred overseas, such as dividends and interest, is recognized as a fair and effective way of collecting taxes and is built into most double taxation treaties signed by the United States and other countries. But FATCA provides an addition for a 30% withholding of capital transfers and imposes the 30% withholding tax on all U.S. source transfers to non-compliant foreign financial institutions. Now, this is something completely new and different in the taxation laws, in that FATCA rests on the fallacy that if you transfer or sell securities, you are automatically guilty of trying to withhold funds from the U.S. government, and you must prove yourself innocent. And this is a denial of justice as it is known in our Western world. Yet this legislation has taken effect January 1st of 2013. So, with this information, comes now legislation to be introduced to allow government full access to our personal financial data, banking transactions, credit card transactions, and potentially IRA and retirement accounts. How much did you deposit? How much did you withdraw? How much did you transfer? To who, when, and why? Although this legislation at this time appears to have no title or name, I'll read you here. The Obama administration is drawing up plans to give all U.S. spy agencies full access to a massive database that contains financial data on American citizens and others who bank in the country, according to the Treasury Department document seen by Reuters. It goes on to say that the proposed plan represents a major step by U.S. intelligence agencies to spot and track down terrorist networks and crime syndicates by bringing together financial data banks, criminal records, and military intelligence. Now, this is a joke. If you remember, HSBC was caught red-handed and admitted in congressional hearings to laundering almost $1 billion in drug money. And what happened to them? Nothing. They received a fine and continue business as usual. But yet they want to monitor all of the financial transactions, deposits, withdrawals, transfers of every American citizen. Here, the article goes on to say that the Treasury plan would give spy agencies the ability to analyze more raw financial data than they have ever had before, helping them look for patterns that could reveal attack plots or criminal schemes. Goes on to say the planning document dated March 4th shows that the proposal is still in its early stages of development, and it is not known when implementation might begin. So I wanted to go to the source and find more information about this planning document or pending legislation, and this is what I found. Absolutely nothing. Do you mean to tell me on the whitehouse.gov website there is no pending legislation at all? I find this strange, and what I fear is that this planning document, which will eventually find its way to legislation, will be passed under the wire, ignored by the mainstream media, until it hits our banks and our pockets. With a government that hasn't passed a budget in over 4 years and a Congress in the midst of sequestration, with a president and his operatives being faced with the adoption of the Ryan Plan, which as a cornerstone abolishes Obamacare, why is this significant? Obamacare, as many of you are already aware, was never intended to bring affordable health care to Americans. It was a vehicle to usher in total government dominance and control over the American people. Here, let me show you. These page numbers are pulled from the first House bill on Obamacare, H.R. 3200. And let me go here to page 58, right here. States that government will have possession of all of your health care records and history, including finances, and you will have to have a national ID health card. Page 59, lines 21 through 24, gives direct access to your bank accounts to compel you to pay any out-of-pocket or premium costs electronically without your previous consent. So I wanted to find out more about this. Title of this article is Feds Get Real-Time Access to Patient Bank Accounts Under Obamacare. And I'll just read you this short excerpt here. It's not long before the reader encounters just how far-reaching and invasive this bill really is. On page 57, under Section 163, there is something that would give the government power to reach into benefit recipients' bank accounts. It's called administrative simplification. Doesn't that sound innocuous? And subsection 1173A of this measure, called the Standardized Electronic Transactions, has a provision in Section A, Part 2, subsection B, that ensues that this new governmental power, and I'll read this here, be authoritative, permitting no additions or constraints for electronic transactions. Did you hear that? Permitting no additions or constraints for electronic transactions. Section C says that it be comprehensive, efficient, and robust. Dangerous word. Requiring minimal augmentation by paper transactions or clarification by further communications. And finally, in Section D, it will enable real-time or near real-time determination of an individual's financial responsibility at the point of service and to the extent as possible prior to service, including whether the individual is eligible for a specific service with a specific physician at a specific facility. Okay, now it goes on to say, sounds like something that the Soviets would have done had they been given the capability to its citizens during the Cold War. Essentially, and this is important, the government has the sole authority under the health care bill to fish money out of patient bank accounts without constraint and in real time. And the scary part is that nowhere in Section 163 does it explicitly outline a requirement for patient authorization. In other words, government can take patient money without their permission, authorization, or knowledge. Section 163 does outline limitations on data usage and ensures that patient documents, such as doctor's notes, medications, and treatments, be safeguarded under the HIPAA laws. There is not, however, a single word about obtaining authorization for financial transactions from people who are insured under the government program. The author of this article goes on to say that President Barack Obama may defend this measure by scoffing it off and saying the federal government would never take its citizens' money without their permission. But unless the legislation actually says that, how are they to know? And remember, in all the years that Obama has been president, he has not kept one of his promises. This proposed legislation is not being reported by mainstream media because they are all busy doing their job, misdirecting us and bringing us 24/7 coverage on the election of the new pope. Are we seeing Plan B for this regime to grant itself total control over our wealth, or what little we have left of it, to redistribute and redirect it to the coffers of government and the too big to fails? Please leave your comments for discussion below, and please share this video with everyone. And I'm going to leave you with these two short clips. Thank you for watching.
Warned not to do it, and kept right on doing it, and evidently making warned not to do it, and kept right on doing it, and evidently making profits doing it. Now, HSBC paid a fine, but no one individual went to trial, no individual was banned from banking, and there was no hearing to consider shutting down HSBC's activities here in the United States. So what I'd like is, you're the experts on money laundering. I'd like your opinion. What does it take? how many billions of dollars do you have to launder for drug lords, and how many economic sanctions do you have to violate before someone will consider shutting down a financial institution like this? Mr. Cohen, just move along here, though, on the point, Mr. Cohen. My question is, given that this is what you did, what does it take to get you to move toward even a hearing, even considering shutting down banking operations for money laundering?
So, Senator, we at the Treasury Department, under OFAC and FinCEN authority, don't have the authority to shut down a financial institution.
I understand that I'm over my time, and I'll just say here, you know, if you're caught with an ounce of cocaine, the chances are good you're going to go to jail. If it happens repeatedly, you may go to jail for the rest of your life. But evidently, if you launder nearly $1 billion for drug cartels and violate our international sanctions, your company pays a fine and you go home and sleep in your own bed at night, every single individual associated with this. And I think that's fundamentally wrong.
We'll endeavor to answer your letter, Senator. We did not, as I understand it, retain experts outside of the government in making determinations with regard to HSBC. Now, if we could just put that aside for a minute, though, the concern that you have raised is one that I frankly share, and I'm not talking about HSBC now, because that maybe that not be appropriate. But I am concerned that the size of some of these institutions becomes so large that it does become difficult for us to prosecute them when we are hit with indications that if you do prosecute, if you do bring a criminal charge, it will have a negative impact on the national economy, perhaps even the world economy. And I think that is a function of the fact that some of these institutions have become too large. Again, I'm not talking about HSBC. This is just a more general comment. I think it has an inhibiting influence impact on our ability to bring resolutions that I think would be more appropriate. And I think that is something that you